Hello, my name is Vikas Agrawal and I am the founder of AltPort. Alt is your alternate and Port is your portfolio management services. So some of you who have been following our shows might be familiar with the fact that we as an organization is shaping up very well and we are emerging as one of the largest platform for investing in alternates. And we at Altport we keep organizing this show which we call it Ask the Expert Show. And the whole idea of organizing this Ask the Expert Show is to invite the industry experts, try and read their mind, understand what's happening in and around the economy, and try and take the advantage of the same when you are investing in the capital markets. So with me I have someone very special, very dear to me, my friend, Mr. Gautam Bed. Gautam, first of all, thank you so much for taking the time out and joining this podcast.
Thank you for having me.
Right. So let me have the privilege of introducing Gautam. So Gautam is, in fact, he just came day before yesterday from the US, and Gautam brings about more than 2.5 decades of rich experience when it comes to investing in capital markets, more particularly Indian markets. And he runs his funds both in India and US. In US it's called Stellar Wealth Partners India Fund, and also for India he is part of Complete Circles investment team. He's an advisor to the team and also runs his mid and small cap strategy there. So Gautam, first of all, thank you so much once again for joining in. We'll start with my first question to you is that recently I got a chance to read your book, the latest one. If you can just spend 2 or 3 minutes there and give us a perspective, what was the rationale behind writing another book after having a successful launch of Joy of Compounding, which I am sure all of you would have read the book.
So the second book is called The Making of a Value Investor, and the idea for writing the book actually originated from Twitter. So one of my Twitter followers in August 2022, he just suggested that, why don't you share your learnings from your investment journal and share with us through a book format. So that is where the genesis of the idea took place. I found the idea to be very helpful and interesting. I spent the next 12 months writing that book by sharing the biggest learnings from my investment journal. And I wanted to share the learnings in particular from the bear market in India from January 2018 to March 2020. There was a 27th month long brutal bear market in small cap, mid cap stocks. Over that time period, the small cap index in India fell 55%, the mid cap index fell 45%, and there was widespread price damage in investor portfolios. But the biggest learnings, because as an investor, always takes place in a bear market, and these learnings bear fruit for a lifetime. So I think the people who read the book will be able to manage themselves emotionally and, more importantly, improve their behavior aspect during future bear markets, because this is where at the market extremes, both in bull market, towards the end of a bull market or towards the end of a bear market, is when the biggest investor mistakes tend to occur. But by understanding how these market cycles work, you'll be able to avoid those mistakes. So that was the basic idea of writing this book. The book covers my journey as an investor and my evolution in my investment process during that bear market, and my learnings along the way. So that's the basic premise of the book.
Okay, great. Many congratulations, and thank you so much for educating all the investor community as a whole. And you've been writing these books, and it is really becoming very helpful for investors to create a framework first and then go about implementing those strategies. Now coming back to point, सबसे पहला question, market क्या लगता है? So what is your sense? Where are we headed now with this kind of situation?
Personally, I am very bullish. I think India is, in specifically small cap and mid caps, I think we are just on the cusp of starting a new bull market, provided the US-Iran-Israel war does not escalate any further. We have had a ceasefire recently, but this ceasefire has to hold long enough for a long-term peace deal to be signed between the countries.
Right.
And after that, I believe we are in for a new bull market in small cap, mid cap stocks. I think we are right now in stage 1, and every bull market, if you look at the past history of bull markets in India, every bull market has got 3 stages. That's stage 1, stage 2, stage 3. In stage 1, the most beaten down stocks tend to rally the hardest because they are coming just off depressed valuations from a bear market low. But many of these will be very low quality businesses whose stock prices have fallen the hardest. So in this stage 1, those stocks rise the fastest and the sharpest. For example, in the last 1 month, look at the stocks which have gone up the most: Galant Ispat, Reliance Power, Jai Prakash Power, Electra Green Tech. These are business models which are not that superior, but those stock prices are rising the fastest in stage 1. So basically the stocks which were showing maximum highest relative strength during the end phases of the bear market, those stocks in stage 1 of the new bull market, they rise just about as much as the mid cap small cap indices, but they do not go up much more than that. The most beaten down stocks in the previous bear market, they are the ones who are rallying the hardest in stage 1. In stage 2 of a bull market, the market starts becoming narrower. Companies with strong management guidance and commentary and earnings growth, they are the ones who are getting disproportionately rewarded by investors. So in stage 2 of a bull market, the market becomes narrower and more selective. And stage 2 of any bull market is characterized by sector rotation. So basically multiple sectors will do well, but they will not go up at the same time during stage 2 of a bull market. Basically, one sector keeps passing on the mantle to the other sector, and then the other sector keeps passing on the mantle to another one. And then finally, we have got stage 3 of a bull market. This is the stage when stocks, especially from the SME space of dubious companies with no or low bad business fundamentals, they come out with IPOs, and they are heavily subscribed by retail investors, whose surging in presence in the markets is a late cycle indicator. So, for example, the poster boy of the previous SME euphoria in late 2024. In August 2024, we had a SME IPO called Resource Automobile. It basically just had 2 Yamaha dealerships in Delhi. They wanted to raise 12 crore rupees from the SME exchange. They got bids of 2,400 crores. The IPO was oversubscribed by 200x in spite of having next to no business fundamentals. So that and plus, in 2023, you basically had the largest amount of capital raised by corporate India through QIPs. That was followed in 2024 by another record amount of share issuance through IPOs and QIPs together. So 2024, India was the world's #1 IPO market by value and volume. That the largest amount of capital was raised in the Indian IPO market. So when you combine these 3 points, record amount of QIP issuance
in
2024. So basically, that's why you don't rely on a single factor. You rely on you basically use multiple indicators. You combine them to understand when you're approaching the end of a bull market. So in 2024, record IPO issuance, record QIP issuance, plus companies like this SME IPOs being oversubscribed by 200x. That was the peak in euphoria, and the Indian small cap mid cap space peaked out in September 2024. And from September 2024 till March 2026, we had a 1.5 year long bear market. Previously we had a similar bear market from November 2021 to March 2023 as well. There also it was around a 1.5 year long bear market. So just like a bull market has got 3 stages, a bear market also has got 3 stages: stage 1, 2 and 3. In stage 1 of a new bear market, there's a sudden crash in small cap, mid caps. Across the board, stocks are falling, but there is still a buy on dip mentality from the just preceding bull market. People still want to buy the dip. There is less fear. It's more of a abrupt shock, but people are still confident to put money to work.
It's a hangover situation.
Exactly. So basically, that's stage 1 of a new bear market. And after that, in stage 2 of the bear market, the market keeps becoming narrower and narrower. It's a long grinding phase in which the excesses of the past bull market have to be cleaned out. In stage 1, the dubious IPOs from the SME space, they also fall 20-30% like many other small cap, mid cap stocks. But for a bear market to fully complete, those dubious SME IPOs those stock prices have to be completely decimated. The froth has to be completely cleaned out. That gets cleaned out during stage 2 of the bear market, that long grinding phase. There's a lot of price correction in those SME stocks, and there is time correction in high quality small cap, mid cap stocks. So the small cap, mid cap stocks, while they do not go down much in price, but they do go through a time correction. And finally, you have got stage 3 of the bear market, which occurred in March 2026. For a bear market to conclusively end, Nifty or the large caps have to crack. So in March 2026, Nifty had the biggest monthly fall since March 2020. Biggest monthly fall in 6 years. For a bear market to come, and plus small cap, mid caps also had a very big fall. The percentage of stocks in the NSE 500 above their 200-day moving average fell to below 20%. That's also a very strong long-term bottom indicator that the bottom has been formed for this particular bear market. So and plus along with these technical factors, there are other behavioral aspects at play. You'll suddenly see many people on Twitter, talk suddenly, and many financial influencers talking about the virtues of fixed income instruments. You'll start seeing people promoting real estate investment trusts, investment, InvITs for their high dividend yields. People will start saying that India doesn't have growth, US, and other markets have got better growth opportunities.
Yeah.
There's a lot of pessimism about the Indian economy and the markets.
Right.
So when you combine all these factors, technical and sentimental factors together, that is when you get a bear market bottom, which I feel that we have hit last month in India.
Okay.